So this is higher level incomplete records, and it's the second. There's two methods. First was using the cash book and bank account to start with. This one here is used. You do it by working at the net worth of the business and finding out from doing your balance sheet. When you've got your balance sheet finished, you find out what your net profit is, and you work backwards to find out what your sales is. This version, there's less rough work to go with it. But still, it is quite difficult. You have a lot of different numbers you need to be dealing with, and you need to be quite systematic. Start from the top of the question and work your way down to the bottom. And as you're dealing with numbers, make sure to try and, if they go, that number that you're dealing with goes in multiple places, make sure to put it in the other place at the same time. Otherwise, you will end up leaving something out, like you may have seen me do in a previous question. So we start off, something I may not have done necessarily in the previous question. You do get marks for this, is if you lay out the name of the two documents you're dealing with. So it's trading profit and loss of, now who is this person? Who is the person who we're doing the business for? So it's T. Turner, and for the year ended 31st of December 2005. And a balance sheet of T. Turner. At the 31st December 2005. Same with all of your trading profit and loss questions. You actually do get marks for naming the document. So we start off, so that these are the two documents on the left hand side here. They're the two documents that we're going to be dealing with. We'll try and finish our balance sheet first, and then we'll once we've done that, then we move and do to our trading profit and loss. So if I try and just move this across to make it a bit easier to see the question sheet. Now, so we'll start off at the beginning of the question. He bought a business for 300,000 consisting of the following assets and liabilities. So we have premises is 220,000. Stock is 18,000. Debtors is 25,000. 3 months rates prepaid is 600. Now rates prepaid. So trade creditors is 27 grand. Wages due, so I'll put that in here. Again, it's a liability, 1,000. 5% investments, 50 grand. Well, that's another asset, so I'm going to squeeze that in here. And in the back of my mind, I'm going to have to remember that I will have income from that. So when I go to do my trading profit and loss over here, I'm going to have investment income. Now, and that figure, it should be, I'm going to put it in as I have it there now, 5% investments, 50 grand. Well, it should be 2,500, unless I'm told that we got more investments during the year. But I'm just putting that in as I deal with it. So back to my opening capital statement. Now he bought the business for 300,000. Say okay, so it doesn't say that he put. So in some questions they might say he put 300,000 to a bank account and bought a business for 280. In this case, he bought the business for 300. You need to add up now and find out what are the assets and liabilities worth, and see is there a goodwill involved, because he invested 300,000 in the business. And did he pay over the odds? And generally that's what did happen in these questions. So that's all the assets. These are the liabilities. So take the two of them away, and that gives us what the business is worth. So that means the goodwill is the difference between the two of them. and I'm going to put that goodwill straight into my balance sheet. Okay, so we continue on. Gross profit is 20% of sales. Now that becomes relevant in the end when we're trying to finish off our trading profit and loss. So we leave that for now. So Turner lodged the business, dividends 10 grand. Well, that's the owner putting money into the business. So that's a capital injection. They made the following payments to the bank account during the year. Now, we don't need to go and do rough work a bank account here, but we just need to make sure that we deal with the payments are made, what they're made for. So he bought equipment from the first of 6, so that means when we're depreciating, we didn't have it for a full year. So the equipment was bought, and I'm just going to put the amount of money in here, 16 grand. So I'll have cost, depreciation, and net book value. So I'll probably end up having to do depreciation, but bear in mind I didn't have it for a full year, so it's going to be less. So now I'll go to my expenses. So light and heat, I paid light and heat 8 grand. What else? Annual rates is 2.4. Interest is 2. Wage and general expenses is 60. And delivery van is 40 and bought on the 1st and 9th. So I'll put that into my fixed assets. Okay. Now while I'm at it, I'm dealing with my expenses. I'm just going to have a see, are there any opening balances at the beginning or opening figures that are relevant to any of these expenses? 3 months rate prepaid 600. So that means there was 600 of this year's paid last year. So we add that into this year's figure, and that rate, it's an annual figure. So that means that's for a full 12 months. So that means if we had 3 months prepaid at the beginning, we must have 3 months prepaid at the end. So that means 3/12 of 2,400 has to be taken out, and it's going to be prepaid for next year. So that's, I'm going to subtract 2.4 times 3/12, because that's 3 months of next year, which is 600. Actually just make a difference to the overall figure. We still end up with 2,400 being the amount we used, but we have a current asset of rates prepaid of 600. You can see now why it's so important to have all the blank documents laid out. As you deal with the numbers, you're putting numbers straight into the question. So we had wages due of 1,000 at the beginning. So wages is including wage and general expenses. So there's no opening balance. So that was due for last year. So I'm going to take that out of this year. It's not relevant to this year, so take it out of this year. Now, we've dealt with this bit here. Each week took stock, so this is drawings for household expenses. So stock then, this is my list of drawings. It's each week, so it's 52 weeks multiplied by how much money? 65 euro. And he took cash, 110 for household expenses, so it's 52 weeks. Times 110. He borrowed 120 to purchase and adjoining premises. So I'm just going to put that in there as a loan. So 120 to buy an adjoining premises. Where is it now? Premises costing 60. We already had premises costing 220. So that means premises is now going to be 280. Now, and again, we have the issue with we have to repay the original amount of money, the 120 somehow, and separately we have to pay interest on it. So I'll deal with the interest first this time. Turner pay interest on the last day of every month at the rate of 5% per annum. So 5% of 120, and then we're going to have that for, we would have had it for, we got it at the beginning of June, so that means we would have had it for 7 months. So the interest used, so I'm just going to put this in here. So it's 120 grand is the amount we borrowed. Multiply that by 0.05, that's 5%. And then we're going to multiply that by 7/12, because we got it at the beginning of June, so 7/12. So 3,500 is the amount of interest we used, so that means we've got 1,500, which is a closing balance as an amount due, and I'm going to put that into my current liabilities. 1,500. Okay. Now, separately, we have to see about repaying the 120 grand. So remember, we have the possibility of setting up an investment fund, or we could just reduce the amount of the loan every year. So what does it say here? The capital sum paid in 20 equal half-yearly installments. The first installment comes due on 31st of 12, 2005. So that means at the end of the year, we're going to have an installment due. And we're going to put that installment into... now, what we'll do with this one is, it doesn't say that we're setting up an investment fund to pay off the 120. So what we'll do is we're going to reduce the 120 by 1/20 because we're paying it in 20 half-yearly installments. So the amount of the loan now is going to be 120 minus 120,000 divided by 20. So that's the first installment. So that means our loan is now going to go down to 114, but we haven't paid the money yet. That money will be due. So that's going to be a current liability installment. So we reduce the loan by 1/20th, and then that 1/20th is due because we haven't actually paid the bill yet. Okay, so that's that one. Remember in the previous question we saw that we set up an investment fund. In this question there's no investment fund mentioned. So that's dealing with that, and we've dealt with our interest, and that will probably end up being an expense, but we're going to deal with our trading profit and loss after. We've got to get our balance sheet finished first. 20% rates payable, light and heat used, interest payable should be attributed to the private section of the business. Now, if you remember the last time we were doing the question, we deal with the drawings, okay, the amount used and paid. We deal with that after we've dealt with the very last adjustment here, which are items that could include expenses that are prepaid or due. So we'll deal with that in a second. So we'll come back to the drawings after. That's the last thing we'll do. Turner decided to charge depreciation 50% on delivery vans and equipment. So now remember it's 15%, but bear in mind when did we buy the items? You have to take that into account. So there's no depreciation mentioned on premises, so therefore premises is its cost figure. So now equipment, depreciation 15% on both of them. Equipment, when did I buy it? I bought it on the 1st to the 6th. So my depreciation is going to be 16,000 times 0.15, which is 15%, and times I bought it on the 1st to the 6th, so it would be 7/12. So that's my depreciation, and I'll subtract those two, and that gives me my net book value. My van then is 40 grand times 0.15, and when did I buy my van? Delivery van purchased on the 1st of the 9th, so that means I would have had it for 4 months. So that means that the vans are worth 38. And I can add up all of my fixed assets now at this stage. So there's my depreciation. Now, including assets and liabilities of the firm were stock 24,600. So, and while I'm at it, I'm going to put that up here in my trading profit loss. Minus 24,600. Stock of heating oil is 600, so that's a current asset. Now, stock of heating oil is that's a prepaid. So that means some of my heating oil is going to be carried over to next year. So I'm going to take it away from the money spent on light and heat this year. So that's going to be a minus. when I'm calculating my expenses. Next one. So debtors is 31 grand, so I'll put that in there. Creditors is 23 grand. Electricity due is 400. That's an expense. Oh, sorry, it's a liability. 400. And when I'm doing my light and heat, I've already taken away from light and heat 600 for the stock of heating oil, but I'm also going to add in the 400 that I should have paid for electricity due. So those two numbers are put in there together. And bank is 5,000. So bank, it doesn't say bank overdraft, so I'm assuming that it's an asset. So I'm going to put this in here as current asset. I'm just going to squeeze this in. And bank. Okay, so I've dealt with that. Now the last thing I need to do is I'll need to deal with my drawings. So I'll go back up to what it says drawings. So the amount used then for light and heat, for example, is going to be £8,000 minus 200 closing balance. So remember there was electricity due and heating oil due, and then our wage and general expenses. That's the amount that we've used. Okay, so 20% of rates payable. Okay, so the amount used is the amount payable, the amount that should have been paid. So 20% of that is going to be a drawing. So the amount of our profit and loss is going to be 19 to 20. So I'm going to just put that drawing figure up here for rates. Okay, and so that's a rates drawing. And what's the other drawing? 20% of light and heat used. Okay, so light and heat used is 7.8, and it is 20%. Yeah. And the last one then is 25% of interest payable. So again, that's the amount used, not the amount we've paid, but the amount payable. That means the amount we should have paid. And it's 25%. So that means the total drawings is all of those numbers added together. So we have no drawings of wage and general expenses, so therefore the amount of our expense is going to be that figure, and the amount of the expenses is that figure there for light and heat. So we now have our 4 expenses, so light and heat, rates, etc. So we'll deal with those in a second. We have the figure now for drawing, so we should be able to finish off our balance sheet. So drawings is minus, there's the total figure. The capital was a figure given at the beginning of the question. He bought the business for 300,000. So we've got our capital injection of 10 grand, that was dividends. We've got our drawings dealt with. So the missing figure then is going to be net profit. Now, I know when I add up my totals, my total for capital employed is going to be the same as my net assets. So that's how I'm going to end up working at the missing figures going to be my net profit. So if I add up all of my current assets, I'll add up my current liabilities, and I'll take the 2 of them away. So my net assets then is going to be these 2 numbers added together, which means that's what my capital employed, actually I'll just label that. That's what my capital employed figure must be. So therefore my net profit is the number that I have to find that will make these 2 figures add up to be the same. So net profit is going to be this number minus my loan minus my capital minus capital injection, and then I'll add my drawings, which is a minus figure. So 58,115, that doesn't sound right. Let me just check that. I don't think that's right. So capital plus the injection plus our drawings plus our loan. Oh, maybe it is right. Okay, so that means I made in this case I made a net loss. Just I was surprised to see a net loss there. So that net loss then goes up as here. I'll put that up there. Now, okay, as I say, I'm surprised to see that being a loss, but that's the case, and I think I've just checked that, and that does seem to be right. Okay. Yeah. So what I've done here is, just to repeat, I'll add up and work on my net assets. Then I've got my capital employed. So the net assets must be the same as the capital employed. So the missing figure, to make the two sides add up to be the same, the missing figure has to be our net profit. In this case, we seem to have a net loss. Okay. So now I work through this. I'll take the numbers that I've got from my expenses that I've already worked out. So light and heat is 6240. Right, so I'll just take that, underline that after that one. So rates then is 1920. Interest is 2625, and wages and general expenses is 59. So I'm going to add those two together, or those four numbers together. And generally, as I've said in these questions, there generally would be 4 expenses. Now, so I need to work out what my my figure above is, and so that I can work out my gross profit. I'm working backwards now. So this taken away from whatever my total figure should give me my net profit. So when I'm working backwards, I'll be adding these two numbers together. So that means that the total figure above is 11.6. My investment income is going to be, and we would have taken away our investment income. Oh, actually, that's the number I think I may have forgotten from my question. I've left out investments. So I'll put those in now. So that number take away that. So that's what I've left out here. I've left out investments. And the investment was, the beginning of the question, 50 grand. And that needs to be included in that. So we still end up with a net loss, but the net loss isn't as bad as it was before. So I've now worked out my gross profit. So there's my net loss. In this case, I'm just going to change that. So I've worked backwards to find out what my gross profit figure is. So my expenses, I've added them in and taken away my incomes to work out my gross profit. And this is where we go to the second paragraph here in the sentence. The gross profit is 20% of sales. So if this is 20% of sales, well, sales must be this number divided by 0.2 or divided by 20%. So that's my sales figure. And then from that, I should be able to work out what my cost of sales is. So cost of sales is going to be those two numbers taken away from each other. And again, I'm working backwards. So to get my goods available, it'll be the 236 plus my closing stock, and then my purchases then is going to be the goods available minus my opening stock. So that's how we finish off the question. Now, with this question, you don't know if you've got it 100% right because there isn't one number that you have to balance at the end. But once you're systematic with this, and you try and start at the beginning and work all the way through it, you're going to be taking into account nearly all of the numbers. So that means that you're going to get most of the marks for the question, even if it turns out you've left something out.